do live in unprecedented times. Thankfully, we're here today, living in the new normal, albeit virtually and digitally.
And in 2020, unsurprisingly, Southeast Asia's migration from the offline to the online economy broke all estimates. Changes that were expected to take place over half a decade took place in just 1 year, in large part because of the consumption habits brought about by the pandemic.
If we fail to effectively address and mitigate accelerated climate change now, it would cost us so much more. It would be a cost in terms of quality of life, in terms of resources, and our very existence in the future.
We have to look at it as a whole. Everything is linked, everything is interconnected and interdependent.
We have a very strong point of view that the future of jobs really in this digital economy, which now all of us are getting exposed to.
Technology and public health are not often mentioned in the same breath, and yet technology adoption and economic growth have become more correlated.
This could be a time when the unicorns of tomorrow are being founded.
Good morning, everyone, and welcome to yet another special edition of Business World Insights. This is RJ Balinbin, your host and moderator for today's session. Trading is widely acknowledged as critical to the global and domestic economy by expanding a country's market, making goods and services more accessible, and paving the way for innovation. The Philippines' total trade amounted to $17.88 billion last November, according to the Philippine Statistics Authority's preliminary data. Yet the trade deficit continued, with the balance of trade in goods standing at $3.68 billion. As economies have been reopening across the world, what can the country expect in exporting and importing? What new or untapped trade opportunities should it look into to boost the economy this 2023? That and more will be answered by our trade experts joining us today in this discussion themed Philippines Trade Opportunities in 2023. We will be hearing from our speakers one by one before moving to the free flowing panel discussion. We'll take questions from you guys later, so better take notes, jot down your questions, and send them in through the comments section below. Don't miss this chance. Now, without further ado, let's jump right in. Our first speaker is Mr. Clifford Academia, Vice President for Operations, Aboitiz Infracapital Estates. He has around 20 years of experience in operations of commercial centers, office developments, industrial parks, and integrated mixed-use townships. He joined the Aboitiz Group in 2012 as head of operations for the commercial business unit in Cebu, And in 2016, he became head for operations of Industrial Business Unit in Luzon. Mr. Academia is currently Lima Land's vice president, heading operations for Aboitiz Infracapital Economic Estates. He is also the public sector representative for the infrastructure sector of the Regional Development Council, Region 4A, the president for Batangas chapter of Employers Confederation of the Philippines, and a member of the Board of Trustees for the Philippine Ecozones Association. Ladies and gentlemen, Mr. Academia.
Good
Sir, good
morning.
morning.
Thank you, RJ. Good
You can,
morning to
yes.
good morning to our live stream audience and to my fellow panelists in this esteemed group. Pleasant morning. Allow me to start things off by giving a brief introduction about Aboitiz Infracapital Economic Estates. So, with a 30-year track record, Aboitiz Infracapital Economic Estates is Asia's leading developer and operator of industrial anchored estates that are complemented by a mix of commercial, residential, and institutional uses. Today, our economic estates span 1,400 hectares of development across the Philippines, and we are home to upwards of 200 world-class companies and leaders in industry that directly employ 100,000 people, and with using the PESA and NEDA multiplier effect, positively impact the lives of about 1 million people. Our economic estates are located in Luzon and in the Visayas, and they are namely the Mactan Export Zone 2 Estate or MEZ 2 Estate, a 63-hectare PESA registered zone in Lapu-Lapu City in Cebu, and it is just adjacent to the Mactan Cebu International Airport. Our second estate in Cebu is West Cebu Estate. It is a 540-hectare PESA registered zone in Balamban, Cebu, just over 50 kilometers from the city, and is known as the shipbuilding capital of the Philippines. Our largest estate, Lima Estate, is an 800-hectare PESA registered zone in Lipa and Malvar, Batangas. And it is situated at the heart of Calabarzon, the Philippines' most well-known and premier center for industry and manufacturing. As a leader in the industry, Aboitiz Infracapital's economic estates is committed to advancing industries and life. And we do this by catering to a growing demand of industrial spaces in fast rising economies outside Metro Manila, and spurring economic growth in the countryside through investments and job generation. And finally, elevating the profile of Philippine industrial estates and establishing the country as a preferred investment destination in the region. For the past 30 years, our business has always been about transforming industrial estates into future ready and smart economic centers. We began with expanding our industrial parks into mixed use estates that feature complementary uses such as commercial, residential, and institutional. We are also committed to putting sustainability, resilience, and smart technology adoption at the forefront of everything that we do. Doing so will ensure our economic estates adhere to the requirements of an increasingly sophisticated and discerning market, and helping establish the Philippines as a preferred investment destination in the region, and allowing us to continue creating high value added jobs that uplift the lives of our fellow Filipinos. Good morning. Thank you.
Thank you very much, Mr. Academia. Indeed, very interesting insights. Now, our next speaker is Mr. Ruben Carlo O. Asuncion, Chief Economist at Union Bank of the Philippines, Incorporated. Mr. Asuncion is an economists with experience in macroeconomic analysis and surveillance of Asian economies, covering macroeconomic, business, and financial market issues. As chief economist for Union Bank of the Philippines, Mr. Asuncion leads macroeconomic research covering the Philippines and other relevant economies and financial markets. Prior to joining Union Bank in 2016, Mr. Asuncion was a research economist and consultant for the Macroeconomics Research Division of the Asian Development Bank. Everyone, let's welcome on screen Mr. Carlo O. Asuncion. Sir, good morning.
Yes, good morning, RJ. Good morning to all our participants, those watching online, and good morning to our my co-panelists here. And thank you to Business World for the invitation. So I'm gonna keep this short and sweet, but let me just talk about trade in general and how the Philippines has performed so far in the last probably 2 years. So, despite the efforts to improve trade, the Philippines' monthly trade deficit has been increasing. That average between 3 to 6 billion since 2021. The main themes include stagnating exports due to the lack of a robust manufacturing sector and continued reliance again and again on imports. Mineral fuels and consumer goods are major growth drivers for imports. That is in line with the economy's reopening in 2020. All is not dark and gloomy, but in 2022, there was a double-digit growth for both exports and imports. That is 10.7% for exports and 13.1% for imports last 2022. Again, that is because of the reopening of the economy and just the lifting of restrictions narrative that has afforded the country basically a very robust growth or GDP growth in 2022. Again, we look to different issues, probably regulatory issues, supply chain disruptions, and again, infrastructure challenges remain to be the barriers in boosting trade in the country. Um, Again, we in 2023 we do face a some dark clouds, some headwinds, and we have been experiencing that right now. Just rising interest rates, rising inflation, and just the uncertainty of where the Fed is going, the U.S. Fed, and the various impacts of that on the economy after the time of after keeping all interest rates at an ultra low, and then last year just recouping that and moving to a higher interest rate level, and that of course has affected a lot of things all over the world, and that includes our own trade situation here in the Philippines. Of course, those are not just because of that, but there are other issues probably that we can talk about later. Thank you so much.
Thank you, Mr. Carlo Asuncion, and for the overview, and of course, yeah, for the outlook. We will have more of that later. Now, our next speaker is Mr. Senan M. Perlada, the Executive Vice President and Chief Operating Officer of the Philippine Exporters Confederation of the Philippines. Completing our until 2020, Mr. Perlada was the longest serving head of agency director for 12 years of the Export Marketing Bureau of the Department of Trade and Industry. Currently, he is the Executive Vice President and Chief Operating Officer of the Philippine Exporters Confederation. His fields of expertise include international trade and investments promotion, cross-border trade policies, procedures, and trade facilitation, and formulation and execution of countries' export marketing strategies for key export sectors and markets. Mr. Parlada, good morning and welcome to this panel, sir.
Good morning, RJ, and good morning as well to co-panelists Mr. Clifford and Sir Ruben. And good morning to everyone who's living us or watching us on stream. I was hoping that government would be present here because what we are talking about today is really something that, of course, both the government and the private sector should be taking action on. And I hope that with my little statements that I will make here, I would be able to fill in from a also from a government perspective. So I'd like to start off by saying that we are now in the present next normal. Okay, and it's a pleasure and honor for me to join this discussion because we have a subject where we all have a collective and personal stake, as I would call Avengers. Avengers because I'm convinced that this next normal, in this next normal, we are not just gearing up simply to bounce back to where we were before pre-pandemic and our old ways of doing things, but rather to, bounce forward and be up to speed on developments which are even more difficult and challenging for us to keep up with as the digitalization of the global economy gains even more traction. Likewise, the global recovery and performance we are currently witnessing is actually an outcome of the revenge economics, if you will, and it's very strongly felt, particularly in the manufacturing and tourism sectors, which both have cross-cutting impacts in the international trade supply chain. But within this seemingly happy picture of being able to bounce back, bounce forward, we have a lot of headwinds, and a few of them have already been mentioned by Ruben, and one of which is the country's growing trade deficit, which widened by 38% in 2022 from 42.2 billion in 2021, and more than doubled from the 24.6 billion in 2020 as imports show signs of recovery from market disruptions caused by the pandemic. But this performance is actually not new to us anymore. Actually, if you look at the past 10 years, period 2013 to 2022, the country's trade performance has not really improved if we look at the figures. We have an ever-widening trade deficit for the past 10 years. Total trade, of course, is growing at a compound annual growth rate of 6.8%, with exports growing at a compound annual growth rate of 3.7%. But take note, imports simply overwhelming exports, growing at a whopping 9.1% compound annual growth rate. There is a study, and the findings of which by the International Trade Center, or ITC, that the Philippines actually has unrealized export potential to the tune of something like 49 billion US dollars, which is actually quite substantive, from which we can build our Philippine Export Development Plan on. Our export performance so far suggests that Philippine export markets have been increasingly become more diversified in recent years, with the number of economies to which our country exports growing from about 70 in 2000 to 200 now. Now, you might think that's impressive, but here's another thing. The Philippines actually has diversified in terms of products. Sort of good news, right? So we have our products, our current diversification for products stands at about 10,558. Now, this simply means that we are able to provide products which have more complexity, that are able to give us more value added all across the value chain. And we have potential new products which are more complex, and our percentage is 82. Now, any percentage higher than 50 actually means that we have a lot of opportunities in terms of being able to provide more complex products to the world market. Potential new products, we have 2,303, and the export opportunity in more complex products stands at 57%. That is also higher than 50%, which gives us really all of these potential opportunities for becoming a better player in the global market. We have potential new products more complex than the country's average of 1,886. And our import replacement opportunity in more complex products stands at 32%. Now, this is the other way around. Any percentage lower than 50%, again, presents as opportunities. Sounds good, but still, it is lamentable that the composition of our top 10 export markets has hardly changed in the last decade. The market and product diversification becomes even more relevant as sectors like furniture and wearables are experiencing declining orders due to recession in the traditional markets such as the US and Europe. Now, towards this end, think tanks like PIDS recommends to address diversification where the country has revealed comparative advantage such as processed fish, seafood, industrial oil, cereals, pasta, bread, animal, vegetable oils, and extracts. Another short-term diversification strategy looks at products that are relatively close to the current production structure but has no revealed comparative advantage. This includes parts and accessories of more sophisticated instruments and devices, equipment, minerals, parts and accessories for motor vehicles, and products related to plastics, among others. So what ails Philippine trade, particularly export trade? Do we really lack the opportunities that we need to propel our exports? I argue that no, we do not lack the opportunities. In fact, we are very rich in trade opportunities. What we really need to address are the challenges behind our borders. The non-tariff barriers that for decades long have been obstacles in our capacity to make our country a strong competitive exporting nation. Indeed, the Philippines, unfortunately deviated from the usual trajectory of industry-led economic growth, where manufacturing accounts for a better percentage of GDP. Today, we are a service-oriented economy, accounting for 58% of GDP and around 60% of employment. And we have been observed, the Philippines as a market, become a market for finished consumer goods instead of being a strong player in the export market due to weak industrial linkages, a limited export base, and low product diversification. On top of that, I mentioned a while ago, the non-tariff barriers make exporting increasingly difficult. Restrictive regulations, high logistics costs, and the recent imposition, and I'll go with this in detail later, value-added tax on local inputs for exports are bottlenecks, which will hamper our efforts to fill our decades-long trade deficit. Okay, so I think for now, I just want to say that in this opening statement, basically my key message is that, and this is also for BusinessWorld, we should not only be looking for opportunities for 2023. International trade, I think, cannot be confined to a few years framework. And we also have to look not only of opportunities, but really challenges. Again, taking a longer-term perspective. With that, I'd like to end my opening statement and be happy to discuss with our co-panelists forthcoming. Thank you.
Thank you very much for that, Mr. Sananth Prahlada. Now let's have all our speakers back on screen for the Q&A. There you go. Now we have Mr. Asuncion, and we have Mr. Perlada, and we also have Mr. Clifford Academia. So I think Mr. Asuncion has mentioned a lot of points already pertaining to the first question, which is, to give us a little bit of a background of what has how's the trade so far in the recent years. But okay, I think we can get more insights from our two more speakers. How was the trade in the Philippines in recent years, sir? So what were the major growth drivers as well as barriers before we move on to the next questions, I think we need to have some background a little bit more. Sir Sanan, you want to add more to that?
Um,
Yeah.
Basically, the nothing much has changed. Philippine merchandise exports for the past 10 years or more has always been electronics, right? More than 50% of our merchandise electronics is accounted for by exports. Roughly, and I don't know if my figures are still correct or not, but Mr. Academia can bear me out on this. Actually, roughly about 75 or 80% of total merchandise exports are coming out of the Philippine economic zones. Okay, so that's where the picture is. I mentioned about product diversification. Although
Yeah.
in theory, I mentioned about opportunities. There are a lot of bottlenecks that we still face, and we in Phil Export have always carried on the advocacies for us to enable more of our exporters to get cross-border. Okay, get past the Philippines in order to really participate in the global market. And I always mention this: a lot of the constraints and challenges we have are actually behind the border
Yeah.
obstacles, not market access obstacles. Because we've signed free trade agreements. We are beneficiaries of generalized system of preferences in the United States and EU. We all have all of these market opening, what you call this, frameworks that we can really take advantage of. But yet, we have not been able to really catapult our exports, much like our neighbors have done. And I think what we really need to realize is that I hope that this past pandemic or this pandemic, has given us a lot of lessons. And I hope that we learn from that. We should not waste this crisis and make use of our learnings to really make us bounce forward rather than just to get back where we were before the pandemic. Okay, so basically, not much has changed in terms of trade, really.
All right, sir. But can you be more specific about the behind the border challenges? I've heard so much during the pandemic, like the s- other
Okay, this
than
is
infrastructural issues, was that, yeah, yeah. Go on, sir.
okay. Well, we have structural issues. For example, our main merchandise exports is electronics, right? And because it's electronics, if you look at our import figures, in order for us to increase our exports, we have to increase our imports because a lot of the components of the electronics are also imported. But take a look at what's happening, especially for those that are importing and for companies that are not in the economic zones. Okay, the regulatory burden on imports, including those inputs for export products, are still very much in play. The government wants to monitor each and every container that is moving in our streets, whether it's import or export, right? Not realizing that it's not really the container that you need to monitor, but what's inside the container. Right? So we have, I think, to have a better system in order for us to be able to do this, no? And again, this system of and now it's being reviewed, right? The value added tax on supplies to exporters, makes our exports uncompetitive if this is really going to push through. Okay, and I think now it is still under review because which country in the world would in effect penalize their exporters by sourcing for products that are actually sourced locally? Okay, when we source product, we are encouraging domestic inputs to our exports, and yet we are not enabling these suppliers to be able to supply their inputs or their products as inputs to exporters VAT free. Why is that important? Because our competitors are not doing the same thing. So we are already, what do you call this? There's already biased. There's already a bias against our exports because we are in effect penalizing our local suppliers from supplying our exporters. And guess what? It's a lot easier to import our inputs, okay, to supply to our exporters. So this is what I mean by behind the border. We're not talking about market access issues with standards, etc., etc. We're looking at regulations that impede exports. Okay, just simply the movement of inputs, the cost of doing business, and as you know, the cost of doing business and of course the corruption that goes with it, if you know what I mean. Okay? Because once there are regulations, then there's a lot of opportunities for corruption.
Okay, thank you very much for that, sir. Mr.
Arjun,
Academia,
Arjun,
yes,
can I add
sure,
something?
Mr. Asuncion,
Yeah,
go.
I just wanted to add something on what Mr. Bernarda has mentioned about those challenges of us not being able to supply to our suppliers, to our exports, our exporters. I think you can see that even in the time when President Trump basically had a trade war with China, and we've seen how a lot of manufacturing firms were supposedly expected to move into different um countries in the ASEAN. No, but unfortunately, actually, it was Vietnam who actually got uh, the large share of those firms that were moving out to China because of the added the tariff barriers that were created, no, by the Trump administration back in, if I'm not mistaken, 2016 to 2020. No, so with that just shows you how much challenge we are facing, in terms of attracting and building up our manufacturing base. Because that's one of the reasons that I have mentioned. Because when they come here, normally they'll come here just them. They even just bring their own suppliers. But sometimes they can't do that, and they can't do that easily. They would rather go to countries or spaces where, when they go there, the suppliers are already there, and then they're just basically going to do what they need to do, and make sure that they go about their business. But unfortunately, we have not been able to demonstrate that, and it's been obvious with the result of that particular trade war situation back in, as I mentioned, 2016, 2020.
Mhm. Thank you, sir. Mr. Academia, anything that you would like to add?
Yeah. I'd like to give an insight, coming from the ground, coming from industrial estate, wherein we do see the action and the investments coming in for the country. Um, I confirming Mr. Sanen's statement that it's really semiconductors and the like are the leading manufacturing exports coming out of the zones. And just to put this into perspective, our estate in Lima, in Batangas, it's an 800-hectare estate, and we have about 150 companies there. 100 of that is operating. 25% of that, or 25 companies, are constructing, and then another 20 is ongoing designing of their facilities. So what am I trying to say? We do feel the challenges in the industry, in the export, in the manufacturing export industry, and as shared by Ruben as well, that there are challenges in the foundations of attracting investments in the country. However, we also see wins. We see the potential of the country to, you know, to make a big leap, and we see that happening in the estates, in the industrial zones. Um, we we see that we are benefiting from the U.S. China trade war, and then we're also beginning to see the effects of the recent geopolitical situation. So these companies, although the Philippines isn't top of mind, but we are getting some investments from these situations. No, however, to the point of Mr. Senen, we need to do something so that our leap would be exponential. We need to work on the foundations and on the basics of regulation and uh, making it easier to open business here, cost of doing business, and all the related regulations and support systems, you know, including the supply chains. So we in the industrial park business, we believe that we have what it takes, um, and we just really need to find our way through the headwinds, so that we are able to make that significant leap forward.
Thank you, Mr. Academia, for adding more insights to that question. Now, what trade opportunities? I know Mr. Senen has pointed out that we should not just be focusing on this year, but beyond 2023 as well. So, what trade opportunities should the country, the Philippines, focus on this year and beyond, sirs? Are there also untapped potentials? How can the Philippines recognize and leverage these for growth? Yes, sir, Mr. Senen. I think you can start, sir.
Okay, well, among others, when it comes to exports, really producing and exporting products that have higher local content, okay, really provides us with a lot of opportunities. And these are really agri-based. No? I mean, just to give you examples, and this one maybe you can relate to. Just quick example: ube, for example, purple yam. If you go to America uh, and look for ube products, there's a lot of products that they are uh, aching to use ube. Okay, just for the novelty as well as for the actually taste and the variety that we have in the Philippines happens to be, I think, the best tasting one that they can find. Now the problem is again the production capacity. So we go here into what kind of high value crops we should be able to provide to the world market. Chocolate is another thing. Yung cacao natin. No? We have award-winning chocolate that we can export. Again, our problem is capacity. Our award-winning chocolate makers and exporters, I doubt very much that if they're given a huge order, they will really be able to supply what the market requires. We have our marine products. Okay, we have our furniture, and we are very good we have very good furniture designs, and we have very good materials for furniture. But here's a typical example, like for furniture, and again going back to government regulations, and this is probably you might call a quantitative basis, no? But do you know that for us to be able to export wooden furniture, we have to get a CITES certificate. CITES is for the Convention for the International Trade in Endangered Species, right? And so if we're using wood, we have to get the CITES certificate from DENR. And the fee that exporters have to pay is 3% of the FOB value. Okay? Now, to me, or to us at least in PhilExport, that sounds more like a tax. That's no longer, I mean, DNR is not a revenue generating agency of the government, right? 3% based on FOB value. What reason will you have to charge that amount? Okay, so we find that I think that these electronics, for example, we are faced with COMELEC. You know, whenever there's elections, then there's gun ban, and then the control of chemicals, regulated and controlled chemicals, you know, that are very, very important for our electronics industries. Even that is affecting us. And again, the VAT, the issue on the VAT. How can we have, and this I agree, right, with the products where we can produce products with more complexity and therefore making us a more sophisticated export player, if you will, and going up the value chain, we have more opportunities to benefit more players. The problem is that that does not encourage even investors to locate in the Philippines because they do not want to be faced with that kind of a problem. And what do you call this? Even Ruben has highlighted that as well. You know, Vietnam appears to have been able to pick up a lot of the slack that got out of China. And it was simply because of ease of doing business and the cost of doing business. So while we have our economic zones, and I'm glad that Mr. Academia discussed what the opportunities are for their properties. But you know, it's not going to be an easy sell for them either, because if they are going to be faced, or if their locators are going to be faced with something like this, then we're not really going to be bouncing forward. You know, we cannot take that leap forward that Mr. Academia was talking about.
Yeah. Thank you, Mr. Sanan. And what's interesting is that we're saying all these challenges, the ease of doing business challenges and the cost of doing, but despite the implementation of the ease of doing business law. So I think there's a problem to that. Now,
There's still a lot to
Mr.
do.
Yeah, Mr. Asuncion, what opportunities do you see this year and the coming years?
Yeah. Well, recently we did sign eventually the Regional Comprehensive Economic Partnership (RCEP). So that's China driven. Okay. So I don't know if the US is going to come up with their own, but that's definitely an advantage, you know, that we can look into. It's still something to be happy about and to be excited about, particularly just looking at the opportunities it can give us. Particularly, um, I think Mr. Parlade has already mentioned about the electrical equipment and machinery. One is tourism also and transport. No? But nevertheless, there's a cost. There's upskilling. There's retooling that needs to be done in our workforce, and we know that we have had some mismatches in the past, and have continued to have those that has been holding off our our growth in this particular areas. No, also MSMEs could benefit, from the access the market. I think it was mentioned that market access is not really the problem. It is really something behind, about regulation, talking about the tax, talking about that permit that needs where you need to pay something that's what's that, sir, 3%. So I mean that's very huge. No, if you have a huge
Yeah.
order, then wow, that really can keep you from making sure that you supply your orders, no? And again, those are the challenges, no? But I don't want to dwell on that. But nevertheless, we are also looking at China's reopening for this coming month, and what we've seen so far, the data, it has not been that strong yet, no? But we're very optimistic about that, and thinking that again, because we know China has been our biggest trading partner, at least in the past years, and that would be good for our situation.
Yes, and Mr. Academia, from the avoidance infracapital perspective, what opportunities are you looking at?
Yeah, RJ. So let me shift. Let me quickly shift the conversation from commodities to services. So um, recently, the IBPAP has had this strong push for countryside employment, and they want to create 1 million jobs, and they believe that 60 to 70% of that will come from the countryside. So economic estates such as ours are positioned well to cover this or to provide this solution for these companies. And one of the key success factors of the country is our labor force, actually, both for manufacturing and also for the IT sector. So we believe that this will continue to be something that will be a strength and will bring opportunities to the country, especially with new. We'd like to call it new generation industries that we'd like to invest in the country because of the talent that we have. But to Ruben's point, there will be upskilling needed. Um, but we'd like to believe that we maintain some advantage here. We just need to put in the programs in place and education and curriculums in place so that our future labor, our young and future labor force would be able to tackle that demand or that interest. So we believe that there's a big opportunity on that side as well. Thank you.
Okay, thank you. Now, in 2021, the International Trade Center said that the exports of the Philippines were less diversified at the product level compared to the most other ASEAN countries such as Laos and Brunei. I know Mr. Senan mentioned about diversification, so let's talk more about that. How can we further diversify our export products? What needs to be done in this area?
Okay, I
Yes,
think
sir.
that, diversification, innovation, and of course creativity is very important, right? Now, even with the very basic, let's say, even commodities where we are strong in, we really have to take advantage of whatever innovation we can do for these products. It's happening for some industries. Coconut, for example, we are very strong in coconut. We can produce a lot of coconut. Okay, we have commodities that can actually go into the higher end and more complex products, and to a certain extent, we have been able to do that. Okay, so coconut, you're not only looking at your coconut cream powder. You have your coconut water, which is very much in demand in the global market. You have your virgin coconut oil, which benefits our MSMEs. The more sophisticated one is the MCT, medium chain triglyceride, where they are able to capture the best portion or the best cut of coconut oil that produce a lot of these health benefits, right? Okay, but for some, we have not been able to do the same. Banana, we're very strong in banana as well. And for the most part, we're also having problems in being able to maintain that. What other products can be made out of banana? We're not seeing, for example, banana flour, which is very, very interesting because our markets are demanding, for example, gluten-free flour, right? So there are opportunities that we can do where we are strong already. We can also have products that will already be able to, well, enable us to do country branding. And so, again, part of the things that I want to discuss later is about our national quality infrastructure. Because in order for us to go country branding, we need to have a good, reliable, okay, quality infrastructure that we should be able to do. So again, the opportunities would be really, export clusters that can be part of the global value chain, and we have a lot of that in the Philippines. Food and agri-marine, because of the very high local content. These are products. Basically, anything food and agri-marine would be good opportunities for us and will kind of really help us address a lot of the trade deficit and all of that. Then, of course, labor-intensive manufacturing. Of course, that's getting to be dangerous now because of artificial intelligence and robotics and all of that. But there are still products that really need to be made as a craft. Just to give you an example, the even in our garments, right? The embroidery that we do, the smocking that we do, okay, in the Visayas. These are very unique products that can only be done by high labor intensive products with very good value that you can sell in the global market. Of course, it's not value, it's not volume anymore, it's value. So there are certain niches that we really have to look at. And in terms of that perspective, that's really where Phil Export is in terms of our members, right? My apologies to the gentleman here, but Phil Export members are not economic zone locators. Okay, these are really battle scarred veterans that fight it out in the global market. Right? We don't enjoy any substantial incentives by way of what is provided for example, those that are located in the economic zones. So these are the guys that actually can make a difference to tilt and move the needle forward in terms of us being able to bounce forward rather than just simply bounce back. Thank you.
Yes, thank you, Mr. Berlada. Mr. Asuncion, anything that you would like to add to that?
Yeah, I think that Mr. Perlada has already mentioned about agriculture
Yeah.
and how it actually can hit two birds in one stone. We're having problems in food security, in all those things, and how technology and innovation can come in and be able to support that, and advance the food security at the same time, increase our production so that we can export specific products, specialty products that nowhere else can be found, that only in the Philippines. No? So there are so many products, and uh, there's this one story that I always share in forums like this. Uh, 2030, Singapore is targeting to produce 30% of their produce, food,
Yeah.
within Singapore. And if you can just imagine Singapore is a concrete jungle, but they use technology, they leverage technology, innovation to actually be able to produce and do that. I won't be surprised if they will be exporting soon. So um, I hope that we can actually, be able to leverage on that, and in fact, there are some
Yeah. And
vertical plantations already that I'm seeing in YouTube, watching in YouTube. Wow, it's here in the Philippines. No, so I think that that's something that we can really work on, harp on, and probably get government support on.
so, okay, thank you. From the avoidance infra capital perspective, Sir Clifford, how can the company support that?
Um, so the Avoitis Group's vision for the next 10 years is to become the country's first conglomerate. We believe that innovation will be key to the country's leap forward. So, um, sorry, I won't be able to mention any specifics, but I believe we're in a position to look at the opportunities that Mr. Senen actually mentioned, and how we can layer in innovation and technology to provide that leap forward, no, in terms of agriculture and the like. Uh, in the space of industrial estates, we we do see a lot of companies importing um, components and raw materials as inputs to final products. So we believe that this might be something that the local market can supply and can work on as well, so that inputs to these exported finished products can be locally sourced, and therefore add and contribute to the local export components, no, or values, no. So There's a lot of things to do. We begin to understand how we can play in that particular space, um, and definitely something more that we can explore about how we can help on the local scene naman, on the local manufacturing scene, and how we can adopt technology and innovation to bring that leap forward as mentioned. Thanks,
All
RJ.
right. Yes, gentlemen, there's a question from our audience regarding behind the border trade-offs in present regulations. What is the leverage there ever since? Has there been absolutely no advances in supporting local suppliers? And in what ways can you support local industry based on what you know now as big players? I think, uh, yeah, Mr. Senen,
I think
as
yeah.
yeah,
So normally when we talk about international trade, the usual concern of countries is how to penetrate markets. So these are tariff and non-tariff measures, okay, at the border or beyond the border. Okay, so that's why we negotiate free trade agreements to penetrate. Behind the border simply means that these are basically regulations, okay, burdensome regulations that actually impede or sometimes become obstacles for us to bring out our products cross border. Okay, so how to say, how are we going to leverage that? Actually, that is the problem, because we're not able to leverage on that. It's the other countries that are able to leverage on that, so that we, our exporters, are prevented from moving our products cross border as much as they are able to do so. Consider Vietnam, for example, and Thailand, just very close ASEAN neighbors. When it comes to exports, everybody's talking about exports. Okay, they're it's sad to say, right? I mean, I could be guilty of maybe they accuse me of being biased. But yes, these countries have a bias for exports. Regulations are lighter on exporters rather than importers. When it's going out of the country, okay, it's all out support, because they know that we exporters provide, of course, revenues, foreign exchange that help us to pay for our foreign debt and our imports. Okay, so when it's going out, we're biased for exports. Unfortunately, I must say for the Philippines, I'm almost about to conclude that we are more biased towards imports, and we can see that in our figures that I described. Our annual compound annual growth rate for imports is, overwhelming our exports, because it's easier to import than to export. Okay, so yeah, in order to address that, of course, the ARTA is there already, right? And to a certain extent, ARTA has been able to address a lot of things, and it has raised the level of awareness of the things that we need to do. But for example, I don't know now how many years ARTA has been in place, but I have not yet heard of any major penalties or sanctions uh, to any government agency that has been making, business in general difficult for not only exporters, but for business in general. So ease of doing business is still a concern. Sometimes we have a joke. Sometimes in the export field, we say this is not ease of doing business. This is being eased out of doing business. Okay, because of the regulation. So pardon the pun, but I think we really need to take a good hard look at all of this. Thank you, RJ, and thank you for the one who asked that question.
Mr. Asuncion, do you have something to add to that?
No, go ahead. Go ahead. Go ahead. I have nothing to add.
All right, Mr. Academia, I think the question is for everyone. Feel free if you have something to add to that question to Mr. Senen's insights.
Nothing to add from my end.
Maybe,
Yeah.
maybe I mean the second part of the question, if I didn't catch up. Has there been no assistance whatsoever to the suppliers? I think there are some programs that have been able to assist suppliers. Yes, I mean in the case of the DTI, and I speak for my former agency, the Export Marketing Bureau. Of course, there's a lot of assistance that we provide all the way to the producers of products. No? But really, they're nothing compared to the hurdles and obstacles that pertains to the bigger picture, which is exports. For you to be able to go cross-border is a lot. For you to be able to bring an MSME from starting a business all the way to being able to export on a regular basis is really a very very big challenge. But that's not to say that's nothing's being done. Yes, there are so many things that are being done, but it's not enough for us to be able to overcome the bigger hurdles and obstacles that we are facing when we are exporting.
All right. We I think many of these obstacles and challenges have been, repeated over and over again. I wonder if there is actually a platform between ARTA and the private sector to have a dialogue on which areas to actually improve. Is there anything like that, sir, Mr. Sanan?
Oh, we are very very much appreciative of ARTA, okay, and the
Yeah.
work that they are doing. But remember, ARTA's work is really with government, agencies. Okay, put it this way. I mean, one of the more recent things we are supposed to be able to have a platform called TradeNet. Okay, this will bring in roughly, I think, over 60 government agencies that are involved in exports and imports and cross-border trade. And we are supposed to do that already digitally, okay, as part of our national, so-called national single window and all of that. Now, to date, I've already retired from DTI. We're still talking about that. ARTA has been very, very supportive, but I think ARTA itself is finding difficulty in getting the needle moving on a lot of the government agencies that really need to put their act together in order to help exports. So I hope I'm not making that conveying that message. ARTA is very helpful, and at least they are on our side, right? But ultimately, it's really the government agency itself that's involved that really has to take action on a lot of these things that we're talking about.
Okay. I think we have three questions also for the Avoidance group, and this is for Mr. Academia. Sir, how equipped are the country's existing industrial parks to house manufacturers? And how prepared are the infrastructure, utilities, and services in these areas? Do we have current applications of such readiness? Mr. Academia.
Thank you, RJ. So right now there are over 4,000 companies that are located in economic zones across the country. So these companies include very prominent names, no? So in export manufacturing. So this only proves that the industrial parks in the country are very equipped and have the necessary infrastructure, facilities, and services to support these companies. For us, however, in the Aboitiz group, we try to take it a bit further and differentiate ourselves. No, so we do it in a way wherein we provide a full suite of complementing services that is provided by our affiliates. So at the end of the day, these companies talk to one provider, not only providing the real estate solutions, but the solutions for power, the solutions for water, even construction, and connectivity services. No, so um, we try to, as much as we can, up the service levels and the service provisions, so that to the point of the panel, ease of doing business is achieved in our industrial parks. So to answer your question, the country is very well equipped. All of the industrial parks have prominent manufacturing companies located in them.
Okay, sir. Another question for the Avoidance Group. What opportunities do further development of further development of industrial parks present, especially for trade, and how can such expansion boost the country's exports?
So the role of the special economic zones is really to help the country in its foreign direct investments push, no, or promotion. So our role is basically to provide the real estate solution for these exporters to when they want to need to locate in the Philippines. So naturally, we have uh, we have a direct role in the in the expansion of these companies, and therefore we have a direct impact onto the increase of exports, because naturally special economic zones are 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 locations for export oriented companies. So we 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 grow this opportunity by now beginning to put in more complementary services and uses. So from a purely manufacturing export uh, industry, we now to shift that to higher value paying jobs and service oriented exports naman. So at the end of the day, industrial parks and industrial estates play a big role in making these opportunities a reality for this foreign investment, for foreign companies that want to do manufacturing export here in the country.
But a follow up to that, sir, how should exactly industrial parks be expanded in the country to accommodate various manufacturers and exports? At Aboitiz, what's your strategy for expansion?
So obviously, um, economic estates or special economic zones expansions are limited by the land that is available, right? So um, the way to take a look at it is, what are the new and upcoming industries that find it attractive to come to the Philippines, and therefore begin to position industrial parks to cater to that need. No, so for example, and allow me to deviate a little bit. This won't be export oriented in a way. Data centers, right? So data centers are perfect for industrial zones because of reliability of power and reliability of connection and utilities. So um, an industrial park can position itself in that way. And to my point earlier, um, industrial parks can make some interventions and intervene into talent development. So because industrial parks are naturally in the countrysides, right? We are not in the city centers. So developing talent in this location so that we can cater to companies that offer higher value jobs, or let's say for example BPO companies. No, so an industrial park can position itself there, no, to be able to cater to these type of companies, and not necessarily uh, manufacturing products. So these are ways that industrial parks can take a look at their expansion plans.
All
Thank you.
right. Thank you. Thank you. Thank you very much, sir. Now, sir, Mr. Senen, there's a question for you. Sir, how about the pili nut products? Is there a great opportunity to export these products?
Oh
Pili nut
yes, yes,
products?
yes. Pili nut products are very, very good opportunities. Traditionally, we consume locally pili for its being a snack food, right? Snack food. But
Yeah.
in the export market, the opportunity for pili is really more for its oil.
Mm.
This is very high value oil that we can get out of pili nut. And I recall, a few years back, pili was even featured in Vogue magazine, for its various applications to the cosmetic industry in particular. And there are companies now that are starting to do this, utilizing pili as a raw material for their high value products that are for personal care and cosmetics. Now, the challenge is there going to be, or is there going to be enough pili for us to really make a dent in the global market for products such as this? No? You're looking at, of course, LME oil. You have to go and look at how you can compete in this market. But yes, it has very good opportunities. The constraint is production. So you go back to the agri side of these things.
All right. Thank you, Mr. Senen, for answering that question. I think we end this session with Mr. Asuncion general outlook for the 2023 exports and imports. Sir.
Yeah, thank you. Well, what we've seen so far, I think I mentioned about 2022 growth has been double digit for both trade and both export and import. And that's in line with the reopening of the economy. 10.7% for exports, 13.1% for imports. So, but with the global recessionary environment, we expect a rather softer growth, with single digit, respectable still, because it's still positive at 5.1% and 4.1%. That's export and import respectively in 2023. We also see tech exports to decline, as demand weakens, but mineral exports are projected to grow by about 5%. Imports are expected to curb again because of the slowing consumption. Again, because of revenge spending doesn't go on forever. And again, um, but then again, we also look at imports recovering in the fourth quarter of 2023 as capital goods and raw materials are expected to rise. So it's a fairly um, softer growth environment. No, but definitely we see a trajectory that wherein we see a fourth quarter rebound, and if eventually all of the what we are expecting, the global recessionary risk, and all of those things, really, happen, because they're still dealing with it. The U.S. Fed is still dealing with it. We are dealing with inflation and all of these things. So we are watching. We are watching still where the global economy is going and where our local economy as well. So that's it for me.
Okay, thank you. I think that's about it. Thank you. So, what a great discussion so far. Unfortunately, we're running out of time. So, to formally close this, perhaps we can have each of our speakers share some, final words for our audience today. We start with Mr. Academia. Sir, for your closing statement.
Thank you, RJ. I'd like to thank um, my fellow panelists. Great to meet you guys here. Great to be able to share insights and learn a lot from you guys. Thank you. So from our end, as a leader in the economic estates industry, Aboitiz Infra Capital Economic Estates is really in a great position to support the country's growth and economic development. We are continuously innovating, expanding, and transforming our economic estates to adhere to the requirements of an increasingly sophisticated and discerning market. And looking ahead, we commit ourselves to really helping deeply establish the country as a preferred investment destination in the region. And we are very honored. We would be very honored to continue working with everyone in driving future further economic, social, and environmental progress for the country. So thank you very much for this opportunity, and enjoy the rest of the day.
Thank you, Mr. Academia. Now, Mr. Asuncion.
Yeah, I just wanted to give my takeaway. Just a few words.
Yeah.
One thing that stood out to me was how other countries are um, export biased. And looking at history, if you look at the history of Korea, history of Japan, even now the history of Vietnam, and how they have leveraged on exports and growing their exports. So I think that's one key that we all have to take away and learn and go through the challenges of such a uh, challenging environment now in the world. And we are a small open economy. We're playing against the big ones. But there are opportunities out there, and I really believe that if we get our act together, do what we need to do, we can leverage on exports and trade in general. Thank
Okay,
you.
thank you, sir. Now, Mr. Sanan Perlada. Sir.
Yes. Well, I think, moving forward, we really need to prioritize as a country to ensure that broad-based industry-level interventions will be supported by firm-level initiatives. We're trying to do this with our programs with ITC. We need to go down to the firm level and perhaps go into some kind of enrollment to really support firms that will be able to make us bounce forward in order for us to address this imbalance, trade imbalance. Now, these interventions were already kind of bulleted in the draft of the Philippine Export Development Plan, which we are anxiously awaiting, because actually this is supposed to be subsumed under the Philippine Development Plan. And as had been identified by the DTI, we're looking at industrial, manufacturing, transport clusters, technology, media, and telecoms, health sciences, modern basic needs. And again, before we end, I guess we have to mention about digital trade, which is, again, in theory, the Philippines should be able to take advantage of. Our country, the Philippines, is the third highest in the world of the daily time spent using the internet. We're almost 10 hours, 9 hours plus, 9 hours, 39, 40 minutes in the internet. Our internet adoption is very, very high. We spend more than 3 hours a day on social media. But the problem is we're not using this for commerce. But this is really the future. Okay? And we have seen this, digital trade. The problem with us in the Philippines is that, again, the bias is really more for imports to take advantage of e-commerce. The export side of e-commerce really has to be developed with infrastructure, with training and development, as well as for us to be able to provide the enabling environment. The problem of our exporters going e-commerce globally is how to move their products cross-border. Okay? If their products have already crossed the border, there are so many platforms that they can use in the respective markets already that they will be able to tap in order to take advantage of e-commerce that has gone cross-border. Unfortunately, in the Philippines, this is still more imports. You know, you go to your online, even if the goods are still coming from China, they can tell you that it's going to be there in 3 days or a week. We cannot do that in the Philippines as yet. So again, there is a bias against our exports. I have to mention e-commerce and digital trade because this is going to be the wave of the future. And this is where I think the Philippines will be able to have this opportunity to address this sort of imbalance against export trade coming from the Philippines. So on this note, let me thank you again for this opportunity, Business World, and for our co-panelists, Mr. Clifford Academia and Ruben Asuncion, for joining us this morning. Thank you.
Yeah, Mr. Ruben Carlo Asuncion, Mr. Sanen and Parlada. It's been a great pleasure having you on today's session. And we're grateful as well to Aboitiz Infra Capital for making this discussion possible. And much gratitude also goes to Asia Society of the Philippines, British Chamber of Commerce of the Philippines, Bank Marketing Association of the Philippines, French Chamber of Commerce and Industry in the Philippines, Management Association of the Philippines, Philippine Franchise Association of the Philippines, and Philippine Chamber of Commerce and Industry. And to our media partner, the Philippine Star, thank you very much. And of course, to every one of you watching this session, please follow Business World Online for updates on more projects like this. So once again, this is RJ Baninbien. Good afternoon.
We do live in unprecedented times. Thankfully, we're here today, living in the new normal, albeit virtually and digitally.
And in 2020, unsurprisingly, Southeast Asia's migration from the offline to the online economy broke all estimates. Changes that were expected to take place over half a decade took place in just 1 year, in large part because of the consumption habits brought about by the pandemic.
If we fail to effectively address and mitigate accelerated climate change now, it would cost us so much more. It would be a cost in terms of quality of life, in terms of resources, and our very existence in the future.
We have to look at it as a whole. Everything is linked, everything is interconnected and interdependent.
We have a very strong point of view that the future of jobs really in this digital economy, which now all of us are getting exposed.
Technology and public health are not often mentioned in the same breath, and yet technology adoption and economic growth have become more correlated.
This could be a time when the unicorns of tomorrow are being founded.